And now we will learn how to apply a client's deposit to damages that they might have caused or to any other expenses that you might apply a client's retainer to. Now in this video, we're using the journal entry method. There are actually two ways we could do this. You see, in method one, using a journal entry, it's easier to show, but there's less detail, and you cannot give your client a paid invoice showing how their retainer was applied. In the following video, I will show you method number two, which means we give a paid invoice to the client for the retainer that we applied to the expense that they caused. The problem with method two is that it requires a little bit of setting up, even though it's a better method. So I will show you method two in the video that will follow this one. For example, let's imagine on April 24th, Betty Boop, our client, threw a fit in the office and caused $535 worth of damages. Now on April 24th, we have already written a check to Rex Repair Shop for repairing that damage. And that damage went into repair expense. So let's apply the $535 of Betty's retainer to the repair expense that we have already paid for. Now what must happen? Well, unearned retainer fees will decrease because we have less unearned if we're using it to apply it to something that the client caused. And whatever specific expense they cost us, that expense will go down because we don't really have that expense because we applied their retainer payment to that expense. So when we record this journal entry, unearned retainer fees will go down, and the related expense, in this case, the related expense is the repair expense. So, if you look at the trial balance before this transaction, you notice that unearned retainer fees are $9,550. But after we write this check, unearned retainer fees will go down by $535 and become $9,020 after we make this journal entry. Repair expense is $535 right now because we wrote a check to repair what Betty broke. But after we make this journal entry, repair expense goes down to zero because we don't really have a repair expense if we used Betty's retainer to pay for it. Let's take a look. Now, before we make the journal entry, we can look at the client balance detail and see that we currently owe Betty $535 worth of unearned unearned services that we received a retainer for. But if we apply $535 of this retainer to some of the damages that Betty caused, then after that journal entry, Betty's balance will be $5,000 even. And that's why I chose the money amount $535 for this transaction. From the main menu, click Company, Make Journal Entry. Okay, don't worry about the pop-ups. Now the date we're making the journal entry is April 24th. Now it's very simple if you follow carefully. Remove the check mark for adjusting entry because this is not an adjusting entry. Directly under the word account, click to bring the pull-down arrow, and the first account you choose is unearned retainer fees. Now, in the debit column, because you're reducing what we owe to them, in the debit column, put the money amount that you're decreasing the unearned amount by, $535, and on the same row where it says name, choose the specific client. In this case, Betty Boop. Now, when you click directly in the next row, QuickBooks knows that the credit column also must equal $535. In the same row that the credit of $535 is on, click the pull-down arrow in the account column, and this time choose Repair Expense. That will wipe out the repair expense that we recorded when we paid, and it will lower the amount we owe Betty because we're applying. So look carefully at this window to make sure you place everything in the proper position. Then when I click Save and Close, you can now see Betty's balance is $5,000 even. And when we look at the trial balance, we can see that the numbers are exactly as we predicted. Unearned retainer fees is $9,020, and repair expense has disappeared and gone down to 0.